Do you want to know the secrets of wealth creation? Well, you're in the right place. Wealth creation is a journey, not a destination. It's a process that requires patience, knowledge, and an understanding of different financial instruments. But don't worry, whether you're a seasoned investor or a newbie just starting out, we're here to guide you through it all. Now, you might be wondering, why is wealth creation so important? Well, it's simple, really. Wealth creation is not just about having an abundance of money. It's about financial independence. It's about having the freedom to do the things you love without worrying about your finances. It's about securing your future and that of your loved ones. In this video, we're going to unveil the secrets of wealth creation. We're going to delve into the world of investments, exploring the power of compounding, the importance of diversification, and why you should invest in what you understand. We'll also touch on the significance of regular investments, the need to avoid debt, and why patience is indeed a virtue when it comes to wealth creation. But that's not all. We'll also discuss the importance of reviewing your investments regularly, how to tackle the silent wealth eater, inflation, and when to seek professional help. Yes, the journey to wealth creation can be daunting, but with the right tips and guidance, you can navigate through it with ease. Remember, wealth creation is not a get-rich-quick scheme. It's a long-term game that requires strategy, discipline, and a bit of courage. It's about making informed decisions and taking calculated risks. It's about understanding the market trends and using them to your advantage. So, are you ready to embark on this journey? Are you ready to learn the secrets of wealth creation? If yes, then buckle up. It's going to be an enlightening ride. Stay tuned as we unravel the 10 golden tips that every investor needs to know for successful wealth creation. Ever heard of the term compounding? It's the first secret to wealth creation. Now let's break this down a bit. Compounding, in the simplest terms, is earning interest on interest. It's like a snowball rolling down a hill, gaining more snow and momentum as it goes. Consider this example. If you invest $100 at a 10% annual interest rate, you'll have $110 after 1 year. Now, if you leave that money untouched, the next year you'll earn interest not just on your original $100, but also on the $10 you earned as interest. So the second year, you'll end up with $121. That's an extra dollar earned without doing anything. And the longer you let your money compound, the faster it grows. This is the power of compounding. It's a slow process at first, but over time, it can lead to huge gains in your wealth. So remember, the sooner you start, the more you benefit from the magic of compounding. Diversification is your second key to unlock the wealth creation door. Imagine walking on a tightrope. It's risky, isn't it? Now imagine walking on a wide bridge, much safer, right? That's essentially what diversification does for your investments. It's about spreading your money across different types of investments, stocks, bonds, real estate, commodities, and so on. This way, if one investment doesn't perform well, you have others to fall back on. Let's consider an example. Say you've invested all your money in technology stocks. If the technology sector crashes, your entire portfolio takes a hit. But if you've diversified and invested in different sectors, the impact of a single sector crash lessons. It's like not putting all your eggs in one basket. If you drop the basket, you lose all your eggs. But if you distribute your eggs into different baskets, dropping one won't be as devastating. Diversify your investments and spread your risks. Ever wondered why Warren Buffett, one of the most successful investors, only invests in what he understands? Well, there's a simple wisdom to it. When we understand something, we're better equipped to make informed decisions. This applies to investments too. Imagine you're in a dark room, it's unfamiliar, and you don't know where the furniture is. You're likely to bump into things, right? That's what investing in what you don't understand is like. You're stumbling in the dark, and the bumps could be costly. On the other hand, if you understand your investments, you're in a well-lit room, you can see where you're going, avoid obstacles, and reach your destination safely. That's the beauty of understanding your investments. It lights your path to wealth creation. Remember, investing isn't about following trends or jumping on the latest hot stock. It's about understanding what you're investing in, how it works, and how it can help you reach your financial goals. So, before you invest, take time to understand. Consistency is the key to wealth creation. A profound truth that underscores the importance of regular investments. Now imagine a river that flows continuously, carving its path and shaping landscapes over time. Like that river, regular contributions to your investment portfolio can create substantial wealth in the long run. Investing a fixed sum of money at regular intervals, known as dollar cost averaging, reduces the risk of entering the market at the wrong time. It's less about timing the market and more about time in the market. Over time, regular investments can smooth out the highs and lows of market fluctuations, potentially leading to steady growth. Another advantage of regular investments is they can be automated, freeing you from the stress of market watching. This automation can help discipline your investment behavior, preventing emotions from clouding your investment decisions. So, make regular investments a part of your wealth creation strategy. Remember, consistency in investments can compound to significant wealth over time. Debt can be a stumbling block in your wealth creation journey. It's like walking forward with a heavy backpack. Every step you take, the weight slows you down, making progress a lot harder. But why is debt such a villain in our story of wealth creation? Well, the primary reason is that debt costs money. Interest, which is the price you pay for borrowing money, can quickly accumulate, turning a small loan into a mountain of debt. This not only reduces your available capital for investment, but also adds financial stress. The best way to avoid this pitfall is by living within your means. This isn't about depriving yourself of life's luxuries, but rather about making thoughtful decisions. Prioritize needs over wants, save first, then spend. And most importantly, if you do need to borrow, ensure it's for assets that appreciate in value, like a home or an education, rather than depreciating assets like a car or a vacation. So keep debts at bay to stay on the right path of wealth creation. Patience is not just a virtue, it's a necessity in the wealth creation game. When we talk about wealth creation, we're not talking about get-rich-quick schemes or overnight success. We're talking about the kind of wealth that is built slowly, over time, with careful planning and deliberate action. Long-term investments are often the key players in this game, as they allow the power of compounding to work its magic. The longer your money is invested, the more it can grow. Think about planting a tree. You can't just plant a seed and expect a fully grown tree the next day. It takes time for the seed to sprout, grow, and eventually bear fruit. The same principle applies to your investments. By maintaining a long-term perspective and resisting the urge to react impulsively to market fluctuations, you're giving your investments the time they need to flourish. Remember, wealth creation is not a sprint, but a marathon. Reviewing your investments is like checking the health of your wealth. Just as you'd regularly check your physical health, keeping tabs on your investments is paramount. This doesn't mean you should fret over every market fluctuation, but rather have a systematic approach. Regular reviews help you understand how your investments are performing relative to your goals. Are they on track? If not, it might be time to make some changes. It's also an opportunity to rebalance your portfolio, ensuring your asset allocation aligns with your risk tolerance and investment horizon. Remember, markets evolve, and so do your life circumstances. That promising tech stock you bought a few years ago, it might not fit in your portfolio now. Or perhaps you're inching towards retirement and it's time to adjust your risk levels. Regular reviews also keep you informed about any changes in the investment world, so you're not caught off guard. So keep a regular check on your investments and make adjustments as needed. Inflation is the silent wealth eater that you need to be aware of. Picture this: you've stashed away $100 under your mattress. A year passes and you're still holding onto that $100. But what you may not realize is that your $100 may not buy you as much as it could a year ago. That's inflation at work, subtly eating away your purchasing power. Inflation is like a slow, persistent leak in your wealth bucket. It's often overlooked because its effects aren't immediately felt. But over time, it can significantly erode your wealth. It's crucial to factor in inflation when making investment decisions. Your returns need to not just keep pace with inflation, but ideally outstrip it. Investments that offer returns higher than the rate of inflation help to preserve and grow your wealth. By choosing such investments, you're effectively plugging that leak in your wealth bucket. Remember, to grow your wealth, your returns should be higher than the inflation rate. Sometimes seeking professional help can be the best decision in your wealth creation journey. There are instances where the complexities of the investment world can become overwhelming. In such cases, it's perfectly acceptable and often advantageous to turn to the experts. Financial advisors, wealth managers, and investment analysts are equipped with the knowledge and experience to guide you through these intricacies. They can provide valuable insights into market trends, help you understand the risks associated with different investment options, and assist in formulating a balanced portfolio that aligns with your financial goals. Remember, wealth creation isn't a solo endeavor. It's a journey where you can and should leverage the expertise of professionals to maximize your returns and mitigate potential risks. Moreover, these professionals can offer a fresh perspective, helping you see opportunities you might have missed. They can guide you in making informed, strategic decisions, thereby enhancing your wealth creation potential. So, don't hesitate to seek professional help when you are unsure about your investment decisions. We've covered a lot of ground in our journey to unravel the secrets of wealth creation. Let's quickly recap the 10 key tips we've discussed. First, understand the power of compounding. It's like a snowball. The longer it rolls, the bigger it gets. Second, diversify your investments. It's never wise to put all your eggs in one basket. Third, always invest in what you understand. Knowledge is power, after all. Fourth, make regular investments. Consistency is key in wealth creation. Fifth, avoid debt like the plague. It's a wealth destroyer. Sixth, patience is your friend. Wealth creation is a marathon, not a sprint. Seventh, review your investments regularly. Keep an eye on your money. Eighth, don't underestimate inflation, the silent wealth eater. Ninth, don't shy away from seeking professional help. And finally, 10th, remember that wealth creation is an ongoing journey, not a destination. Remember, the key to wealth creation lies in these 10 golden tips. So start your journey to wealth creation today.